Hi folks, today I'm going to talk about the myth that the Indian stock market generally trades at lower levels towards the end of the month. The reason attributed to this is that the futures and options contracts expires on the last Thursday of every month, and this brings down the market. How did I get onto this topic? Well, a friend of mine sent me a video where the person in that video was saying that generally salaried people invest around the 5th of every month. And he went on to say that somebody had done research and found that the markets trade lower when it becomes the last Thursday of every month. And the reason, as I mentioned before, is because the FNO contracts expire then. This bothered me because this person was trying to give credibility to the video by saying someone had done research. But who is that someone? How much research was it? No such attribution was given. Secondly, how difficult is it to get this data? Well, it took me a minute to go onto the Yahoo Finance site, find out the last 5-year NAV data for a Nifty 50 fund. I drew up a simple table where in the first column, I captured the months starting from Jan 2024 and going back all the way 5 years to Jan 2019. I captured the NAV on the 25th of each of these months and the 5th of each of these months, or in case those were trading holidays, then I took the next trading day. This took me about half an hour to compile. After this, I put a simple formula to check how many instances the month beginning NAV was higher than the month end NAV. I found that out of 60 instances, 36 times the month beginning NAV was lower than the month end NAV. So whatever that person said in the video does not hold true for the Nifty 50 in the last 5 years. For the second data cut, I assume that 5% variation is a significant variation. So how many times did the NAVs between these two dates vary more than 5% of time? It was only 8 times that the NAVs moved more than 5% higher or lower. 52 instances, it was lower than 5% variation, which I assumed is not significant. Interestingly, it was only once that the NAV moved more than 10%, that is in March 2020, in the beginning of the month, the markets were higher, and towards the end of the month, it dropped by 26%. But you know the reason for this drop? It was due to the pandemic that the markets had dropped then. So to bust this myth, the first thing I used was data. But data and numbers are not the only things which we have to take into consideration when it comes to investing. There are other factors which play a major role, like risk appetite, allocation of funds, and investor behavior. If you're a salaried person, you can imagine how difficult it is to hold on to the funds till the end of the month and invest. Typically, what happens is you get your salary, you end up paying your bills, your groceries, your EMIs, etc. in the beginning of the month, and you also end up doing your savings. So it is much more convenient to do this in the beginning of the month. In the long term, it is investing our money and waiting for the compounding to kick in, which really helps us grow our wealth. I would also recommend that you look for credible sources where you can get research, data, etc., which will help you in your investing journey. Most of these sites operate on a freemium model where you can test them out, see what kind of articles, what kind of research, what kind of data they give you. And if you're interested, you can pay to get more services. This would really help enhance your investment journey. So I hope this helped bust a myth for you today. If you have any queries, please drop a comment or reach out to us on our contact points, and we'll be happy to get back to you. Thanks for subscribing.